It's not all rosy, but remember, I mean, I think 3/4 of companies are beating on the top line. Obviously, companies are keeping more of what they earn. So this is not, I wouldn't call this a bad earnings season. We're off to a decent start. And if you think about where we are globally, if we don't get too deep into trade wars, global growth looks quite good. Valuations in a lot of parts of the world look reasonable. To me, the concern is the stronger dollar. If we keep seeing a stronger dollar, then that will be disruptive, and that's what we need to be watching.
That's apparently a lot of investors' concern. I mean, Stephanie Link was here yesterday saying that more questions on the strength of the U.S. dollar than on trade tariff headwinds. And I guess this is the quarter where the dollar stops being a tailwind, which it is right now, in terms of the outlook, and starts being a headwind. How big of a deal is it? Dollar's almost at the strongest point we've seen over the last 10 years.
Well, right, but remember, the dollars tends to move in these long periods. So you see this 6, 7, 8-year period of advance, and then the dollar cycle tends to change. So we thought we had a break in that in the beginning of 2016. We were moving into a longer period of dollar weakness given U.S. trade deficits, given U.S. fiscal deficits. The trade war and the rhetoric around that has reversed that. If we go too far on monetary tightening and tariffs, then the strength of the dollar would ultimately derail this cycle.
There's a lot being made, David, about the uncertainty around tariffs, and everyone's wondering, is this going to impact business decisions, hiring decisions, capital investment decisions? For all the hand-wringing over that, no signs of layoffs yet. Jobless claims reaching a new record low today.
Yeah, I mean, the tariffs are a negative, all the tariff talk is, but this economy is extremely strong. I mean, we're still tracking about 5% real GDP growth at an annual rate in the second quarter. And of course, unemployment claims close to 200,000. So it's a very strong economy. The other thing I think, though, is I think we're eventually going to see a trade war ceasefire before Election Day. I mean, if you think about the politics of this, we really don't want to go into Election Day with just having imposed $200 billion of tariffs on Chinese goods, pushing up prices at Walmart, still confusion in the auto sector because of the auto tariffs. So it would be much easier for the president to say meet with Xi Jinping, talk tough and say, hey, I got a deal, I got a better deal because I was tough here. I mean, the political imperative to be working towards lower tariffs rather than higher tariffs, I think, is very strong. So I suspect we're going to get a trade deal at some stage, even if it's kind of on paper more than in reality. And I think that could help stocks and help diminish uncertainty.
Help by how much? How much is baked into even a cosmetic deal between the U.S. and China?
Well, I don't think anything's baked in terms of a deal. I think that uncertainty is hurting the markets and holding the markets back right now. I mean, if you look at earnings this quarter, we believe earnings per share will be up about 27% year over year. I mean, just the amount of money that companies are earning and are capable of distributing this year ought to be pushing the stock market higher. So I expect the stock market will get a lift if we get a relaxation of these trade tensions or some sign that we really want to cut a deal which involves lower tariffs rather than fight a perpetual war involving higher tariffs.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.